Look at the diamond on your finger. Is it a symbol of permanence, or just the centerpiece of a $2 billion lie? We are told that Wall Street and global banking are guarded by impenetrable walls of audits and logic. We trust the system because we assume the math is checked and the records are absolute. But what if those walls were built on nothing but a single, unchecked digital message? This is the story of a man who turned the global banking system into his personal vault. You see, the spotlights the high-end boutiques in London and New York, and the visionary behind the brand. To the public, he was a golden boy of luxury. But behind the glitz, his empire was a ghost. Nirav Modi did not just buy the diamond industry. He hacked the infrastructure that sustains it. He found a crack in the foundation that nobody else noticed, and he began to pour billions through it. While the world admired the brilliance of his stones, the reality was not found in the vault, but in a ledger that showed nothing at all. The entire fortune was a phantom, and for 7 years, the system never saw it coming. Modi needed fuel for his rapid expansion. A traditional business model would have stalled under the weight of standard collateral checks and years of rigorous audits. He could not wait for bank approval, so he looked for a shortcut. He found it in the Letter of Undertaking, or LOU. In the world of international finance, an LOU is essentially a promise. It is one bank telling another, if our client fails to pay, we will cover the debt. It acts as a digital handshake between institutions designed to move massive capital across borders with speed and trust. It was meant to simplify global trade. Modi recognized that this trust was a vulnerability. He did not ask for a loan, he weaponized the promise itself. He realized that if he could control the issuance of these letters, he could bypass every internal safeguard meant to keep the institution solvent. He treated the bank's commitment not as a guarantee of safety, but as a blank check. By manipulating the very nature of institutional trust, he turned a standard banking instrument into a private mechanism for limitless capital accumulation. The walls of audit and logic were still there, but Modi had found a way to walk right through them. The operation moved from the boardroom to a single, nondescript branch of the Punjab National Bank in Mumbai. Modi did not need an army of hackers. He needed access. He approached the bank staff, offering incentives that far outweighed their salaries. Once the internal gatekeepers were compromised, the true heist began. He gained entry to the SWIFT network, the secure backbone of global finance. This was the point of no return. His contacts sent official, verified messages to banks across the globe, issuing guarantees for his shell companies that appeared entirely legitimate. These banks saw the digital seal of the Punjab National Bank and immediately released the funds. But the brilliance of the deception lived in the silence of the internal ledger. Every time a massive guarantee was issued via SWIFT, the team simply refused to enter the transaction into the bank's core accounting software. The money flowed into Modi's accounts, but back at the bank headquarters, the screen remained blank. It was a perfect digital ghost. The debt existed in London, New York, and Dubai, but it was invisible to the auditors in Mumbai. He had turned a state-owned institution into his private printing press, and the system did not even blink. For 7 years, the carousel turned without a single stutter. Modi perfected a high-stakes shell game that relied on pure momentum. To keep the overseas banks from calling in their loans, he simply issued new, larger fake guarantees. These fresh injections of credit were used to pay off the interest and principal on the older, maturing debts. It was a cycle of synthetic growth. Every month, the scale of the deception expanded. He funneled these billions into the expansion of his brand, opening luxury storefronts in the world's most expensive capitals. The glitter of the jewelry served as the perfect mask for the void in his accounts. He lived with the certainty of a man who owned the world, while the invisible debt piled up behind him. Each new LOU was a gamble, the desperate push to keep the balance sheet from collapsing under its own weight. The numbers on his screens grew into the billions, yet not a single cent of actual collateral existed to back the promises. He was betting that the music would never stop, piling layer upon layer of digital fiction to sustain a lifestyle that was fundamentally hollow. The higher the empire rose, the more fragile the foundation became. The music stopped on a Tuesday morning. The employee who had guarded the SWIFT terminal for years was gone, replaced by a clerk who followed the rule book to the letter. Modi's team arrived with the usual request for a fresh letter of undertaking, expecting the standard silent processing of the digital guarantee. They handed over the paperwork with practiced indifference. The clerk took the documents, tapped a few keys, and paused. He frowned at the monitor, then looked up. "Where is the collateral?" he asked. The team stared back, frozen. "We never needed collateral before," they insisted, their voices tightening. The clerk did not argue, he simply turned the screen around. It was blank. No records, no assets, no history of the billions that had supposedly moved through the system for years. The clerk hit the refresh key, but the result remained the same. A $2 billion black hole stared back at them from the ledger. Silence filled the office, heavy and suffocating. The clerk reached for the phone to alert his superiors, his hands trembling. The illusion had finally hit a wall of reality. Within minutes, the alarm reached the headquarters, and the shockwaves began to tear the bank apart. The news of the exposure hit the banking sector like a tidal wave. While investigators scrambled to trace the phantom billions, Modi did not wait for the inevitable knock on his door. He vanished. By the time the authorities secured the warrants and descended upon his offices, the desks were empty. He had already crossed the border, slipping out of the country before the first raid was even planned. The hunt went international. He traded his corporate headquarters for a life in the shadows of London, moving between high-end properties while the world's police forces closed the net. For months, he remained a ghost in the city, avoiding the spotlight that had once defined his career. But the digital trail was too wide to ignore. A journalist eventually spotted him walking down a busy street in London, the camera capturing the moment the illusion finally shattered. The police response was swift. Scotland Yard officers cornered him in the city, ending his flight and forcing him into a holding cell. He remains behind locked doors today, trading the luxury of his former life for the cold reality of a legal battle against the consequences of his gamble. The cell door closes, but the questions remain open. $2 billion did not vanish because of a complex algorithm or a sophisticated cyber attack. It vanished because a single person trusted a handshake more than a verified record. The entire global financial system, with all its firewalls and international regulations, proved to be only as strong as the human being standing at the terminal. This was not just a failure of banking. It was a failure of the human character that underpins every transaction we make. We rely on institutions to be impenetrable, yet this story reveals a chilling blind spot. If one person can bypass the gate, can we truly claim any system is safe? The diamond on your finger was bought with credit that never existed, backed by a promise that was never kept. As the legal gears grind on, the real lesson is not about the man in the cell, but about the fragility of the walls we build to protect our wealth. Can we ever truly trust a system that relies on a single person to verify the truth? Or are we all just waiting for the next clerk to look away?